Hello, welcome to forexfilms. Today is Monday, May the 9th, 2011, and today we're discussing the collapse of the euro. We, for a long time, have had many fundamental reasons to hate the euro, but technically it's still been rising, and if you had shorted it, you'd be hating yourself. So let's look at what's going on right now. European sovereign debt has become a major talking point once again. Portugal's getting a bailout. Greece is pissed off that they're getting better terms than they are, and Ireland now on Saturday was saying the same thing. If Greece gets better terms, they should get better terms. But it all doesn't matter in the end because Greece debt is going to have to be restructured at some point. It's just gonna have to happen. Taking a look at yield on the pigs right now, Portugal is just over 9%, Ireland's almost 10%, Italy still more reasonable at about 4.5%, Greece almost 16%, and Spain just over 5%. So those yields are getting, and have been for a while, pretty ridiculous on Portugal, Ireland, and Greece. The thing that really started all this off was the huge surge in initial jobless claims last Thursday, the second biggest miss on record. And on Friday we also had unemployment start increasing again to 9%. ISM non-manufacturing index dropped from 57.3 to 52.8%. That measures the service sector, which is close to 90% of business in the U.S. economy. So it's a sure sign that the U.S. economy is slowing down. Also, coming up here in the next few weeks, millions of people are going to be losing their extended unemployment benefits. So things aren't looking rosy at all. Also, on this move down, there was high futures volume, which is a sign that this is the reversal we've been waiting for. We had this triangle last week that we were watching on both the euro and the US dollar index. Then we had a clear 5-wave move out of the triangle, which was pretty quickly reversed, and in the next 2 days we had a 625 pip drop, which also continued on today, but has been retraced for the most part. So, one more thing to add to our case here. Let's draw another line. If we start from the bottom here, we can see that last week we closed on the underside of this trend support. And this is really my favorite line here, but either way you draw it, we clearly closed under that support line and are continuing to stay under there for now, even though I think we will have a rebound that will probably break that line again. It just adds to the case that we're in a true reversal that we've been waiting for now. So what are levels to short this at? We have good short-term resistance here, and here at the 38.2% fib retracement at about 1.4520, at the 50% short-term resistance here, and really far back in 2008, which I don't think will really affect it much. At most it'll probably just be that it's around the 50% level if it makes it to there. Now we've got more short-term resistance at the 61.8%. Plus, if we go a little bit past there, the spike high from the A wave back at the beginning of 2009 into 2008 time frame is there. Also, the next lower resistance, I'll delete this so we can see and pull out to that time scale. The next lower resistance is about that level too, from where we rebounded off at the beginning of this reversal. So there's a lot of good resistance that we could rebound off of there. It's probably going to be around the 382 or the 61.8, and 382 could just be the rebound for a wave, so got to be careful. Always concentrate on the origin rather than fully leveraging yourself at a point inside where it might just be a wave termination. Let's also take a look at a couple more pairs. We have the pound dollar. It's even more clear pattern. 1, 2, 3, 4, 5, and fifth wave out of a triangle. We've clearly rebounded sharply from there, so this is likely an A wave just like in the euro right now. And we have lots of resistance at the 382 and 50%. So those are good possible reversal points, along with just the knowledge that the pound dollar usually reverses quite sharply in second waves, so you should be careful with that. And it's probably better to wait to short it rather than go in long right now. I think one of the best pairs to short the dollar on right now is dollar Swiss. As you can see, we had a failed fifth wave here, and then it looks like we've got a wave. I actually went long a small position here to take advantage of the B wave, and then we should have a C wave to take us lower, probably around in the 86s somewhere. But when we're going long the dollar for the long term, we should concentrate on euros, and I'll show you why. I've probably shown these charts multiple times already, but here, Euro Swiss, even with the dollar rising, we still have the euro being pummeled by the Swiss franc. Let's go out even further. This has just been a huge, long downtrend, and much like the dollar right now, we've got a congestion pattern right here, and we're probably going to go lower in the Euro Swiss before it could possibly rebound, and we'd be more likely to go in Swiss francs than euros. But right now, euro is definitely the best way to be bullish the US dollar. Let's check out euro pound. This lately has been looking a lot like the euro dollar. We even had that same super quick move downward. And if we go out even longer time frame, this was a huge surge upward, and like some of the commodities like oil and silver, we should have a big downward move after this surge. So this will be an excellent short like euro dollar, but I'm currently favoring euro dollar. So I wouldn't even worry about shorting the pound right now. Two top main picks here, euro and Swiss franc. Other than that, just appreciate any comments. Come visit me on my website, forexfilms.com. Any likes and favorites are appreciated too. Thanks for watching.